gold is the only common currency now.
Tether, the stablecoin company, is here, and they're adding gold to the reserves, which is, surprising to a lot of people.
This time around, people are not dropping their cutoff grade as much. So they are making money. And so the industry, they're paying off their debts, dividends are getting paid, they're banking cash, and they're really cleaning up balance sheets.
We're here with Joe Ovsenek. He's the CEO of Tudor Gold, very interesting deposit in British Columbia. I'm happy to say that that's where I'm from. So I'm very excited to be speaking with you about your project and also what's coming up for the entire gold mining sector. Like you were telling me offline, Joe, this is a turning point for the entire sector. Sentiment has never been this good, at least for a long, long time. So I'm happy to have you on the show, and thank you for being a part of the program. Thank you for supporting us.
No, pleased to be here and enjoy the opportunity.
Joe, what is different this year versus last year when it comes to sentiment, financing, M&A activity, drilling activity? Gold's at new all-time highs. It was actually at a then all-time high last year, but you said it's night and day.
Yeah, well, I think the difference is we had an all-time high, but and money was starting to flow. But what you'll notice when gold goes up and money starts coming into the sector, it flows to the seniors first, then it trickles down to the intermediates, the junior miners, and then finally the explorers. So money was starting to come into the sector last year when we were here. But this conference, Beaver Creek, is for the junior companies and explorers, junior developers. And the money hadn't trickled down that far yet. This year, the money is trickling down. And so financings are being done. People have capital, so they can go out and drill. They can go and build. All that was missing last year. So it really is a stark contrast.
Why do you think financing activity was still in the tepid phase last year, despite the prices having climbed up? And especially considering that the GDX started running up this year, so it really looked like capital started flowing in much later than gold's rise from the early 2024 period.
Well, you'll if you look historically, you'll always see that the gold moves. It takes a while for people. I think historically people have seen where gold will take a run, and people will pile in, and it won't have legs. And then it drops and people get burnt and they sort of, okay, I'm not going back into gold. So they're a little cautious when they see gold running. They want to make sure that it's a sustained increase in the price of gold before they come in. And it's different this time, I think, for a lot of reasons, but that is driving it.
Did you get the sense that maybe some banking analysts or investors last year didn't believe that the gold price run last year would stay? It was kind of transitory, if you want to take your own house language. And then maybe this year they're feeling it a bit more. Is that the case?
I think so, but never rely on the bank analysts for the gold price because, gold's at 3,600. I'm not sure what the consensus gold price is going forward for analysts, but I bet you it's probably in the 2,000s.
Yeah.
They're always, if you ask me, behind the curve on where the metal is.
Well, they'll probably be conservative.
They're banks.
Cash flow model. Well, where are we right now in this cycle, in this bull cycle? And if you take 2011 as an example, as a guidepost, are we at 2011? Are we at 2010, 2009?
I'd say we're in the early stages of this cycle.
Yeah.
We're not 2011. We rolled over early in 2012.
Yeah.
And you really notice that. I think we're at the early stages of this run, and I think it's fundamentally different this time. We've got inflation happening, which we haven't seen for 30, 40 years. And we have this bifurcation in the world where we have the BRICS or that group and the more US and European groups. And gold is the only common currency now because people are, especially central banks on the BRICS, they're not wanting to be buried with a bunch of US treasuries because, the US just shuts them down, right?
Yeah.
So that bifurcation, I think, is what's a big difference this time in driving the gold price.
I saw this amazing stat here. Foreign central banks now hold more gold than treasuries.
Yeah, I saw that chart. Incredible.
That was a kind of a recent development. Like in the last couple of years, really, it started this accumulation of gold by the central banks. Why do you think they're doing that?
Well, I think it's that bifurcation. They don't want to just be holding US dollars because if the US says we're shutting you down out of the SWIFT system, you're losing your access. And Yeah, I just think it's that tension between the East and West, or the BRICS and the sort of developed nations and the developing nations, that tension between them,
Yeah.
that is driving a lot of this.
I wasn't around in the industry in 2010. I was still in school. But anyway, I'm curious to get your perspective of what was different back then in terms of the narrative of why gold ran up between mid 2000s to 2011 versus now. The reasons you're giving me now, were they applicable back then or different?
The reasons that we have it now aren't the reasons then. Inflation was dead.
Yeah.
I think maybe it was devaluation in currency, China coming on, big demand out of China for gold and that. So it was somewhat demand driven for the metal, but not like we're seeing today. And also, you got to remember, coming out of the late 90s, gold hit, if I recall, I was in the business, about $250 an ounce because all the central banks were selling it. And so there was a long way for it to come up just to get back to a reasonable valuation in that period, because it had just been driven down by Canada sold off almost all its gold, the UK sold off its gold, and that just suppressed the price of gold. And so eventually it chewed through that supply and started to move up.
I believe before 2011, the last time gold had a huge run up was actually early 70s. And so basically, for the first time in decades, the gold industry saw a massive rally, massive support from the underlying metal. So how did the industry at that time react to what was then an all-time high?
I think a couple of things. One, as you know, margin is important when you're producing gold, because that's how much money you're actually making. And what happened the last time the price of gold went up, people would drop their cutoff grade so they could produce more ounces, because they were focused on ounces. So it didn't matter how much profit they made. They were focused on, rather than saying, I'll make 100,000, no, I can make 200,000 ounces of gold. I'll get a higher rating in my stock. Well, they produced 200,000 ounces of gold without much margin, so they weren't making as much money even potentially. So this time around, people are not dropping their cutoff grade as much. So they are making money. And so the industry, they're paying off their debts, dividends are getting paid, they're banking cash, and they're really cleaning up balance sheets. The last time around, they dropped their cutoff, they didn't have a lot of cash, they went on big acquisition sprees where they paid ridiculous amounts, I think, for some projects. And that really turned off the investment community.
Well, it's probably good for the entire banking ecosystem and the mining ecosystem at the time. But post-2011, we saw what happened to the price. How did the industry, quote unquote, survive between 2012 to 2019?
It was a tough time. Well, exploration dropped off. We permitted and built a mine during that period, and we financed it in 2015. In order for us to finance our mine, we dealt with private equity. That was really the only money readily available. And it was expensive money. We paid 15%, all in. If you look at the cost of the money, it was about 15%, but it allowed us to get our mine built. It was a tough time. There was not a lot of capital available for exploration or for construction of a mine.
With gold at $3,600, you'd imagine the large producers have record free cash flow. You'd imagine with that extra cash, they'd probably be going on, another shopping spree. Is that what's happening?
Not yet. You're starting to see some mergers. I think the way it works usually is after 2011, 2012, a lot of the mining companies, the investors essentially weren't too happy with them for blowing out their capital structures and not really being prudent with their money. And so there's been a lot of work on discipline, so being fiscally disciplined in the mining sector. And I think you're seeing that now. So there's a lot of discipline. They're paying debts off, they're banking cash. At some point, they will go on an acquisition spree, because any mine is, no mine lasts forever. And so it's a wasting asset, if you want to call it. And so they will need to replenish their ounces so they can keep their production up. So production, acquisitions will come, but they're not really, you don't really see a lot of that yet.
What are they waiting for?
I think they're waiting. What happened in 2010, 11, from what I understand, is a lot of the investors were actually pushing the mining companies. Okay, well, where's your growth? Where's your growth? I don't think they're getting pushed about growth at this point yet. At some point, when they're fully cashed up and debts are taken care of, the investment community will say, okay, let's look at where's your growth profile.
Yeah.
And at that point in time, you're going to maybe see the taps open on acquisitions.
Right. The GDX and GDXJ shot up dramatically. The gold mining indices, the junior and the mid-tier indices from VanEck shot up dramatically in August this year. I mean, it's been climbing pretty much all year. But what happened during the summer when basically, if you look at the chart, it went up in a straight line?
I think that really gold broke through.
Yeah.
And 3,500, and really that, I think, finally got this sort of generalist investors, the general retail investors. You know, there's always been gold bugs and people who believed in gold, but more the general investment type. So, look at the return. I think what's gold up this year, 45% or something. It's an incredible amount. So if you're seeing that, and you're maybe seeing some of the bigger indices starting to look like they're topping, this is just a new place to put your money to get a good return.
How does this impact Tudor Gold? I'm talking about the current environment for the gold price and for appetite for gold. How does this impact you?
I think the way it impacts us is we have access to capital. We're in an earlier stage. We've got this large gold deposits, one of the biggest discoveries in recent memory. And so to move that forward, you need capital.
Yeah.
And so with the gold price up and sentiment coming into the industry, where positive sentiment, you're seeing access to capital improve.
Yeah, tell us about the project itself. It's in the Golden Triangle in British Columbia.
Yeah, we're up in northern British Columbia, just east of the Alaska Panhandle.
Right.
When I say a big gold project, we have in the gold category, if you're familiar with the mining categories of resources, we have 21.66 million ounces of gold in the indicated category at a grade of about 0.92 grams of gold per ton, and another 4.88 million ounces of gold in the inferred category at a grade of 1.0 grams per ton. Now, if you look at in the Golden Triangle at these big gold deposits, our deposit, Treaty Creek, it's our project, really stands out because of that grade. It is a relatively high grade for these bulk tonnage deposits. And besides that, we actually have high grade within that. So there's a lot of potential here to build a mine.
The company was founded in 2015, I believe. Walk us through the history of the company.
I'm relatively new to the company. I came on as president and CEO in May of this year.
Sure.
But the company was formed and it bought into a joint venture, for the Treaty Creek project. It acquired a 60% interest in the project from two other parties. One was called American Creek, other one Tudor Resources. They each had a 20% carried interest. And in the mining business, carried means you don't have to put any money in. The other party's paying everything. So our company, Tudor Gold, was paying all the freight, developing this resource and bringing it on, making the discovery. But we had 60%, carrying 40%. So what we did, and we announced this September 4th, so just last week, we acquired one of our joint ventures, American Creek Resources, and so we now have an 80% interest in the project, which really gives us more heft and a bigger percentage of the project, and we can really drive it forward with this percentage.
What's your primary objective as CEO, at least for the next couple of quarters?
Look, my objective in coming into Tudor Gold is having a hard look at the asset and our property, and how do we get from where we are today to production the quickest possible way. And because in the end of the day, it's great to have a lot of gold ounces and everything else, but if you're not producing, where's the return for the shareholder?
Well, fundamentally, why are you positioning yourself to produce? Why not just build up the asset and get a takeover?
Well, historically, from the way we've always looked at things, you always have to be driving your project forward. If you just build it up and say, okay, it's for sale, you can sit there for a long time. And there are a lot of examples of that, where assets have been developed to a certain stage and people say, we're going to sell it. And they can sit there for 10 years, maybe longer. The way you add value is to drive to production. because if no one comes along, well, then you're producing and you're creating value for your shareholders. And if somebody comes along in the interim and says, hey, I'm willing to take that off your hands at a price our shareholders want, well, then best of both worlds for them. So drive it forward, create value.
Tell us about either yours or your management team's history of producing ores and actually putting a deposit into production.
Happy to do that. Our team, we've worked together. Geez, I've worked with some of the people on the team since the mid-90s. So we've worked together a long time.
Yeah.
Our most recent success was our team discovered, built, developed, ran, operated the Brucejack Mine. It's about 15 kilometers south of our current mine. It's currently owned by Newmont Gold, the world's biggest mining company. And so it was a challenge, but we built it. We took it from discovery in 2009 to pouring our first gold in less than 8 years. And that's in northern British Columbia. Tough build. We were building in an area with 22 meters of snow in the winter. We had a 75 kilometer long access road. 12 kilometers of it was over a glacier. So a lot of challenges, but we still were able to drive that through to production in under 8 years. So we have a lot of experience in the area. We've worked with the local First Nations. We've worked with the local communities. So we know what we're doing in the Triangle, and we know how to create value.
I believe, let's take a look at your shareholder structure. So Eric Sprott is a major shareholder.
Yeah.
You've got a significant retail shareholder base, and then Tudor Holdings. What is Tudor Holdings?
Tudor Holdings is the trust of the founder of the company. Walter Storm founded the company back in 2015. He passed away a couple of years ago now, but he had a good-sized holding in the company. And that trust is for his children and for some charitable organizations.
Okay. And how much does management own?
Oh, that's off the top of my head. If management, part of management is represented by that trust. So you bring the trust in, management, you're probably seeing north of the 15%.
Sure.
I've recently come in. When I joined in, we completed a financing. I participated for about $100,000 of that, just to put get some skin in the game.
Yeah. Well, the company currently has about 260 million shares outstanding, I believe. And I'm just wondering how you would transition this company into a production company. Are you planning to do it yourself, partner with somebody, go into a JV?
Oh, from my perspective, look, if we were to try to build a mine that would take advantage of that full 21.66 million ounces of indicated gold all at once, we would need a partner or a big company. What our team is, we've come in, taken a look at the ore body, and what we're working on right now is isolating some higher grade lenses of mineralization within that deposit. What we're focused on doing is, can we come up with, say, 3 to 5 million ounces of gold within that 2 to 3 gram range? Well, we could come up with a mine that we could build. We're thinking something 8 to 10,000 tons a day, CapEx in that billion to $1.5 billion range. That's something we could build and operate, and that gives you a nice starter mine. So you get that in, you start paying off capital and everything else, and all your infrastructure, then you can move on to a bigger mine. But so our focus right now is coming up with a higher grade resource that we can start a mine with as Tudor Gold without a big partner coming in.
What's the timeline that investors can look forward to?
Well, at this point in time, we're still trying to isolate and put boundaries around that grade. I'd like to say we'll have an answer. We'll know if we're successful on that front by, say, November. And if we are successful in putting boundaries around that, coming up with what we'd like to see, I'd say a preliminary economic assessment that would give you a good feel for the economics of the project would be completed by mid next year. Now we have another tact we're taking at the project is we believe there's potential for a higher grade, more grade that on average is something like they're mining down at Brucejack that we built, something that's going to average maybe 8 to 10 grams per ton gold. And but we won't be able to find that out until we actually go underground at the deposit and drill from there, because it's down a ways. So to properly do that and economically do that, we're in the process of permitting an underground ramp, so a decline where you come in, excavate a tunnel down to where you can set up your drills and then drill short holes. It's far more efficient to do that than to try to drill from surface. So we're permitting that. We hope to get that permitted by next spring, and then we would take us about a year to get down there. You can only go so fast when you're driving underground. So take about a year to get it down underground, and then we can move quickly after that. Maybe within 2 to 3 months, we'll know whether we have this higher grade mineralization that we could drive an even higher grade mine with.
Well, give us an update on a recent intersect that you announced.
Sure. When I was talking about trying to outline that 2 to 3 gram mineralization, we have a perfect example of that. We announced just last Monday, we announced a 54-meter intercept at 2.57 grams of gold per ton. We put together enough intercepts like that where we were talking about 3 to 5 million ounces. We have a nice solid gold mine that I think we could produce in that 250 to 300,000 ounces of gold a year, which is a nice sized mine by anyone's standards.
Yeah. Are you how well capitalized are you for the next couple of quarters?
Oh, we're in good shape. We raised just under $15 million last May. We've spent some on our acquisition of American Creek. We've spent some on exploration this summer, but we're still, I would expect we're going to end the quarter around $8 million, which will see us well into the next year. However, I think with this run up in gold price that you're going to see later this year, a lot of people looking for flow through shares. And for those not familiar with flow through shares, that's where we issue shares to shareholders and then we pass our tax losses off in relation to that money to them. So essentially it's a tax write-off for these investors. And so I think a lot of people are going to be making money in the gold space in the coming months, and they're going to be looking to shelter some tax. And so I think there might be an opportunity to acquire, to raise money at a nice premium later this year.
Yeah, just on that note, why wait for later this year? Why not do it potentially now? Your stock's already up, I was just checking, like more than 40% in a couple of weeks.
We feel there's lots of room for our stock to run yet over this term. But also, I don't think you're seeing the premiums in that. As you get closer to the end of the year, the premiums on the flow through when there's big demand go up. Yeah. And I think we can drive a better bargain later in the year. We'll be opportunistic about this. When we see a good value for us and our shareholders, we'll take advantage of it.
What's your reaction to earlier this week, the Teck-Anglo merger? It was a no premium bid, which a lot of investors on the tech side were very disappointed with. What does that speak up to in regards to the current M&A environment?
Look, I think, there's been a lot of, Teck's been, Glencore's been chasing Teck. I think BHP was chasing Anglo. They both know they need to grow if they're going to stay independent. And so I think it was just, they both realized they had to do something. So let's put the companies together, create this big copper giant of a company. I'm not convinced they'll be successful in getting together. I know BHP was really wanting Anglo, I'm pretty sure. And Glencore's made no bones about it. They were interested in the Teck portfolio. So we'll wait and see whether they can pull it off.
Another interesting development that's happening here is that Tether, the stablecoin company, is here, and they're adding gold to the reserves, which is, surprising to a lot of people. I just want to get your reaction to that.
I think it's a logical progression. I've heard of guys working on this for quite a while, trying to tie crypto to gold, so you have the best of both worlds in something that's an alternate currency to the U.S. dollar. And I think it's great, and it brings more capital into our market. It helps us advance projects.
In theory, if gold were digitized, you'd have a lot more access to capital, I think.
Yeah, no, I agree with you completely.
You have a whole new investor base on the blockchain. So, finishing off on the gold cycle itself, you mentioned that there's more room to climb. I'm wondering what you're basing that off of.
I just look at the way the world's going. Yeah. We have these challenges between the BRICS and the West. Central banks are still buying gold. Yes. It's hard to bring, it's supply and demand. People are starting to say, hey, I want more gold in my portfolio just to give me that little bit of cushion and look for the premium that comes with it. And we can't just turn on another mine and say, here's more gold. It takes a long time at times to permit and get in production. So supply is what it is, and that demand is picking up. And so the only thing to give is price.
I'm just curious how you personally reacted to this current cycle. Were you not a little bit nervous when you saw the chart and then all of a sudden you woke up and gold's at $3,600? I mean, a couple of years ago, people were calling for $3,000. They were labeled crazy.
Oh, absolutely, right? But you could just see it developing and it coming along. And so we weren't surprised. We were expecting this just because of as I say, there's limited supply, and it's hard to react to supply constraints in the gold industry.
What do you think, or if you could request the BC government or even the Canadian government to change certain mining policies, what would those changes be?
Well, I think the BC government is doing fairly well. The Minister of Mines for BC is down at the conference. I think that's a big step. And he was talking about how, look, we're looking to streamline permitting. And that's not to say we're lowering our requirements, because a rigorous permitting environment is valuable to us as miners in BC, because it gives people in the rest of the world confidence that when a mine is permitted, it's at the highest standard. So, we don't want to drop that, but we would like to see things streamlined. And in the past, you'll have multiple levels of approvals and that. I think it would be nice if we could get the federal government. The last time we built, we had the permit with the provincial government and we had the permit with the federal government. And yet, you're permitting the same mine and it's all the same thing. So it should just be one process to move it forward.
Do you have to build your own infrastructure, power lines and roads and all that?
Yeah, our last mine, we built a 75-kilometer road, a 57-kilometer long power line. Yeah. Nothing wrong with that, especially for our project, Tudor Gold, our Treaty Creek project.
Why is the government building that for you guys?
Well, they have, the BC government years back, a while ago now, I can't remember how long ago now, 15 years ago, they built the Northwest Transmission Line that runs up north along Highway 37 in British Columbia. We're 40 kilometers off that line, so we're just building a 40-kilometer long transmission line, and it's right along the side of our road. We actually have great access to infrastructure at our Tudor Gold project.
Are you thinking of expanding your project base or land package?
Our focus is on going from where we are today to production. We have a lot of potential for more gold on our existing property. We don't need to go chasing other properties. I don't doubt that there's more than twice what we have already discovered sitting on that property.
I know you haven't done an official PEA yet, but rough estimate, if you were to guess right now, how much would you be able to produce, throughput on an annual basis?
Well, what we're targeting as a first starter mine is what we would like to see is 250 to 300,000 ounces of gold. Now, there's big ifs in there, but we're working on that, and we'll know more and more about this come November, and then if we're successful in November, come mid next year.
All right, so the next milestone that we have to look forward to as investors?
We're drilling up at the site right now, trying to get some more drill holes into some of this grade and so we can help outline the grade. So we've got some more drill results coming out. Hopefully we have some more results like the one we put out earlier this week. So you see that through the fall. Yeah. You'll have more news on our permitting process. We're doing some metallurgical work. So it's just that steady news of moving forward. November will be a big one, and that's when we'll get our resource estimate out with what we would hope is a sensitivity that shows how many ounces we would potentially have at a grade in the 2 to 3 grams range, so that we can move it forward through a PEA. So November would be a big milestone for us.
Let's end on you. Let's talk about your career. How did you get involved in Tudor Gold? How did you get involved in mining?
Well, I got involved in mining.
Tell us about your life job.
Oh, geez. Well, I don't want to put everybody to sleep, but I was a mechanical engineer. But while I was in school, I worked at a mine up in the Golden Triangle, Grand Duke Mine. Really enjoyed it. So when I came out of mechanical engineering, the market wasn't so good in the mid-'80s. So I went back to law school after a few years of engineering, and I worked for mining companies as a lawyer. And then I went to work at a mining company, Silver Standard Resources, mid-'90s. And I'm still working with people I met there today. Great team. We've had a lot of success. So we went from Silver Standard, where we discovered the Brucejack Mine. We went to Pretium Resources, what we started up. I was fortunate enough to be the president and CEO, and with a great team of people, and we took that through to production. So that's a quick summary.
To the people, younger people watching this who are interested in the mining sector, how does one transition from an engineer or a geologist to the C-suite?
Well, stay up on, look, from my perspective, it was just really trying to understand the business and how it works. So you see a lot of great geologists that, and they love geology and they don't want to go past that. But if you want to move past that, you have to start looking at the business side of things. So it's not enough to know the rocks. You have to understand how to raise money, how to deal with people. I think
that's something you'll learn on the job, because you didn't learn that as a mechanical engineer.
You have to learn it on the job. And I think the biggest thing you can learn is how to work with people and actually bring people together. And because you're never going to be successful unless you can put together a team that'll work together and really drive things hard. And that's just a life lesson. You've got to learn to work with people.
Right. Okay. And what were the biggest life lessons you learned along the way?
Well, I had a lot of mistakes along the way, and so that's where you learn.
Tell us about one mistake.
I can't really think of one that I'd want to talk about, but I've had many. And so I tell you, you don't learn anything. Well, I got kicked out of engineering in my early days for goofing off. So I learned that,
okay,
well, maybe you got to be serious. You can't just have fun all the time. Life, you need to put some sweat into things. Maybe a big lesson is nothing comes easy. If you really want success, you have to work at it. It just doesn't show up on your doorstep.
For somebody who's in school right now, should they pursue a career in mining in 2025?
I think it's a great future. Actually, my daughter's gone in. One of my daughters is a mining engineer.
Okay.
And I think it's a fantastic future. The world needs metal, especially you look at electrification, you look at AI, all these things, you need metal. And so a great opportunity for young people. Get in. Yeah. It pays you well. You meet some great people in the industry, and it's just fun. So I highly recommend it.
I went to business school myself, so I don't know a lot of people personally who have been interested in mining, and certainly I went to McGill. There's a big engineering department there.
Yes.
But how would you convince somebody who is entering their early 20s to even look at the sector as a potential career path?
Well, I think you look at what you do when you're in the mining business. If you like the outdoors, there's great opportunity. If you like to travel, there's great opportunity. I've worked all over the world, seeing incredible sites. I've worked in Far East Russia. I've worked up in the Andes. A lot of opportunity to see the world. You get paid, you're compensated well.
Sure.
And there's just, I find it attracts good people. And you end up working with a great crowd.
Okay, Joe, wonderful talking to you. Thank you so much for being a part of the program. Thank you for supporting the show, and I look forward to speaking with you again soon.
Well, I appreciate the time. Thank you very much.
Thank you for watching. Don't forget to like and subscribe.